We have Jonathan Corpina from Meridian Equity Partners right ahead of Disney earnings and lots of good stuff. Jonathan, thank you for joining me today.
Good morning, Olivia. Happy to be back.
Yes, another digital interview. We're going to make this one good, especially because we have Disney coming up. And the stock has gotten downgraded because of leveraging concerns. I don't know if you saw that, but why would that be a concern?
Liv, I think that whole industry is a concern, right? Because you've got multiple aspects to that. You've got their parks and recreation, and then they've got their studios. And on both of those fronts there's clearly trouble and implications from coronavirus. Their parks are closed. Their hotels are not being occupied. People are not spending the money, obviously, that they would have in the past, and their revenue is being affected there. From their studio and production side, they're not producing. They're not putting out any, real new content. There are a few items that, they've upped the release date and get those out to us, which is good. But other than that, they're going to start having an issue with their advertisers, right? Advertisers have bought airspace to air during certain sporting events and certain other primetime scheduling. And they're not getting their dollars that they invested in those advertising hours. So not just yet, I think down the road, those contracts towards the end of the year will start to expire. But there's going to be an issue there as far as advertising is concerned. So when you look at Disney across the board, that's certainly a company that is one of many that's having a significant negative impact on their stock price due to coronavirus.
Well, I was going to ask, everyone's going to be affected by the coronavirus. Like, why in particular are you, beating up Disney? But like you said, it's because of the advertising aspect that's going to hinder their comeback more so than other industries.
Yeah, and those contracts don't end now. So I think the advertisers are on the short end of the stick. But I think moving forward, those new contracts will certainly have different pricing and implications that are associated with it. But I'm not just down on Disney. You look at many different sectors out there. I know we've spoken about airlines, we've spoken about hotels and casinos. I mean, these areas are just have zero revenue at this point. Really, mm-hmm. It's really gone from occupancy on air travel from high numbers down to 25%. They're talking about the new plans moving forward, what airplanes are going to look like, seat configurations. These companies weren't built to operate at a 25% occupancy, whether it's an airline or whether it's a cruise ship, whether it's a busing line, train lines, hotels. That's not their model. Their model does not work under that. So clearly, those companies are going to have to get innovative as to how they are going to be able to remain somewhat profitable as we get through this and as we get back to our new norm. But we don't know what our new norm is like. If you have to travel on an airplane and you want an empty seat next to you, or you only 3 and 3 and there's only going to be 2 people in each one, how long does that really last for? Airlines are going to have to figure out some way to get us our product and then to be able to be profitable and run a business.
What do you think about the meat industry? I mean, we had President Trump sticking up for that industry as much as possible at this moment. Are we going to see meatless stores by the summer?
We go back to, a month ago or 6 weeks ago, and everyone was running out to get, cleaning supplies and toilet paper. And now it's on meat, right? And you could draw that correlation between the distributors in the Midwest that are having, some factories that have to shut down or run at very, very minimal employee operations to produce and provide cuts of beef out to the country. And we're seeing the prices in beef are starting to spike. Supplies are going to go low. The beef industry has gone through so many different turmoils, whether it was droughts or fires, and we now 2020 for them is going to be Corona. So it's going to be difficult for that. What I do see is that cows are still there, and the breeders are still breeding their cows and their calves, and they're going to have to spend extra money to maintain them and let them live and grow for a longer period of time than they normally would in their life cycle. So prices now are going to be high. I think once we get through this and get workers back to the meat plants, then those prices will certainly come down and the supplies of cows will come in. But interestingly enough, it's not, that industry is so unique, right? You can't, I can't just go get a job in a factory there. I mean, that's a skilled position, right, that takes years and years to learn how to do. And you can't just, pull people off of a line and have them come in and do this job. So it's hard getting replacement employees in this area, as opposed to, if you were going to do a different type of manual labor job, it might be easier to transform somebody from one manual labor job to another. But I think in this one, it's quite harder to get to that day.
It's funny because right ahead of this, we were talking about like the old economy versus the new economy, and how, Silicon Valley was the new, like the tech industry was the new, worker of America. And now we're going back to, we can't put someone from Silicon Valley into a meat plant. That's really interesting.
Yeah,
Jonathan.
absolutely. And we continue to have these conversations, and, unfortunately it's gotten this scenario to get us here. But, I saw a TV ad the other night, and that someone said, you will never look at a grocery shopper worker, the same way that you used to months ago. Your appreciation for these service industry jobs that are either working now and providing us with services that we so greatly need and want, or the service industry jobs who aren't able to work right now, whether it's by law or companies have shut down, and we're missing that service. So we've a very painful lesson that we're going through here, but the service industry jobs, we've got a greater appreciation for these positions that are out there, that I think moving forward, those are going to be, positions that we're going to certainly embrace more, and hopefully be able to compensate them more.
And due gratitude for sure. Jonathan, before I let you go, just taking a look at the broader market, we did have some blips in the past few days or past few sessions. Where do you see the market going from here?
Funny, you look at the way the market traded yesterday, right? And we, futures were down. We had the, Buffett, conference over the weekend, and airline talk there, and a lot of pressure on our markets. And the market seemed to just get the muscle it needed and rallied towards the end of the day. And I wasn't really, buying into it because I just didn't feel like it really was strong enough, but it certainly was. And we've seen that carry through today. I was commenting with a client. He wrote me this morning on instant message. I guess we're never going down again. The headlines that are out there, I think we're hanging on, this reopening concept and this reopening idea. I deep down inside, we're not there yet. Certainly our area, New York, New Jersey, Connecticut, we are nowhere close to that. In my opinion, other areas in the country are. They're able to reopen, and hopefully, fingers crossed, their processes go as well as they've planned, and we can use some sort of that as a model moving forward. But I think we're just holding on to, what does reopening look like? When does that happen? Yes, there's going to be stages. How do those stages roll out? And the market feels like, that's getting closer and closer. I know you and I spoke, I think about a week and a half ago, that light at the end of the tunnel was very far away. It's still far, but it's certainly getting closer. And we're seeing that translate in the markets.
All right. Thank you so much, everyone. That is Jonathan Corpina from Meridian Equity Partners. We hope to have you on a few times before we get back to the New York Stock Exchange. Thank you, Jonathan.
Most certainly, and looking forward to that day of being on the floor there with you.
Can't